So last night during Asia, I took a pretty nifty trade, and it allows me to have trades like that, allows me to have equity curves like you see here. I wouldn't say it's the best equity curve, but it's pretty decent. Um, Yours should be looking very similar to this as well. Like it should generally be trending in one way. I did have some days where, again, I had, 1 to 2 days of drawdown, which is completely normal. But at the end of the day, when you have 5 of these accounts, just, consistently just grinding higher and higher, it gives you the confidence, it gives you the cool to continue to just continue trading with your edge, with your mentality. And it just allows to kind of reinforce that base, that ground to allow you to perform as, a day trader with all that logic that you've learned about over the years. So, let's jump into the charts here. This is a quick snippet of Top Step X. This is where I scaled in. You can see here, July 22nd around 7:34. That's when I got in. And as I saw more and more rejections that I liked, that's when I scaled in and I scaled out at 7:54. So let me dive into the charts here directly and let's talk about the trade. Okay. So at a very simple level, as simple as I can to kind of frame this trade. And I'm not even going to be focusing on any of the other time frames, just the 1 minute here. That's all I use to get in. Is on Tuesday at 3:40 and at 3:58, you can see what price did. It created relative equal highs. And then it started dropping around 4 o'clock. Market closed, it reopened. And then what price did is it pushed lower, to, out level. It took the low here at 220 from Tuesday. And again, it's just seeking liquidity here. And once it took it, it started expanding higher. And then you can see here, we had at 7:13 some aggressive bullish momentum to the upside. And eventually what it did is it took some of these highs out from the grouping of highs that I just talked about. But what it did is it failed to essentially take out the high from 3 o'clock. And when I saw price pulling back down, what did it pull back down into? It pulled back down into a very key level, which is Tuesday's afternoon first presentation fair value gap, which occurs when? It occurs on Tuesday at 141. Okay, it's a very key fair value gap, very weighted, strong, etc. And we have the new dog of 721, which is the new day opening gap. And believe it or not, if it's on a Sunday, it's a new week opening gap. So the new week opening gap of 721. You can see what price did here. And if you look really closely at the body of the candles, you can see how they're respecting this level. So on Tuesday, look how many times price respected this level. 1, 2, 3, 4, 5, 6, 7. And then it finally broke through to the downside. And look what it did today. It broke to the upside. It had some resistance though, breaking to the upside. You can see here, candle wicked, body closed within it, wicked above it, body closed within it, body closed within it, and then finally it pushed to the upside. When it pushed back lower, I saw how price was struggling break the mean thresholds of both these levels. It did, to be honest, but it didn't spend a lot of time underneath it. It's still a valid rejection of the fair value gap in the new week or new day opening gap, depends on how you want to look at it. And then eventually price started pushing higher. So like breadcrumb number 1 on why it's going to go higher is price left relative equal highs. Number 2, price started stalling after this push at a key level. Number 3, the bodies are respecting these fair value gaps from a mean threshold perspective. And number 4, we had the Asia macro at this time right here from 7:50 to 8:10. This is another ICT macro that all of us use the last 10 minutes and the first 10 minutes of every single hour. And when I was scaling into my position around 7:30, I thought to myself, most likely price is going to use the 950 macro to push price to the liquidity being the relative equal highs. So, and in my mind, when putting my stop loss so close, it was actually slightly below this at first. It was 1 tick below this green bar here. But when I was getting into this position, I knew that if it does fail, then it's going to probably go lower. But most likely, my bias was price is going to stop at this retracement here at these 2 key levels. And it's going to want to take these relative equal highs at the macro before it starts pushing in a new direction, being either higher or lower. And the trade, it was a 4-to-1. My stop loss was 6.5 handles, and it was a very clean trade. So all in all, it reached into this area right here that I have in pink. I don't know what it is. Let's see. It's a new dog of 718. And then it reversed, pushed back lower, and then price started moving sideways for the rest of the day. So if you're trading Asia, the best times to trade it is between 7 to 9 o'clock, using that macro around the 8 o'clock time frame. And a little hint here, a little key for those who watch this long, try looking at the first presentation after 7 o'clock. And usually when I do trade Asia, sometimes I use that to frame my trade. Hope you guys learned something. Again, very simple, one time frame analysis, just on the 1 minute. This is how price moves. Try to incorporate these specific factors: liquidity, how price uses fair value gaps, the overall trend, and macro, so time then price. And all of that should make you a more consistent trader. So hope you guys enjoyed this video. If you did, drop it a thumbs up. And if you guys want me to cover something else or any specific topics that are a bit murky or gray from an ICT perspective, drop me a comment below. And that'll definitely give me some more ideas for future videos in the future. And without further ado, see you on the live stream.